Hello friends, my name is Mihir Tanna. I am the Associate Director in Direct Tax. Finance Minister Nirmala Sitharaman has presented his 7th consecutive Union Budget for 24-25, and today I am going to take you through key highlights of the direct tax proposal. Let's start with the tax slab rate change. And in this budget, there is a change in this slab rate for the new tax regime. There will be a same tax rate for up to 3 lakh. There will not be any change for the person earning up to 3 lakh rupees. From 3 lakhs to 7 lakhs, there will be a 5% tax rate. From 7 lakhs to 10 lakhs, it will be a 10%. From 10 lakhs to 12 lakhs, it will be 15%. From 12 lakhs to 15 lakhs, it will be 20%. And for person earning more than 15 lakhs, it will be remain same for the 30%. So for better understanding, let me take you to the example. So as you can see from in the screen that we have presented the different slab rate, different person earning income from say 5 lakhs, 6 lakhs, 7 lakhs, and their tax liability before budget and after budget proposal, how that will be changed. So in the above table, you can see that as per the before existing provisions, there will be a no tax up to 7 lakhs. If you are earning up to 7 lakhs, there will be no tax as you are eligible for the tax rebate of the 25,000. But as soon as you cross the income level to above 7 lakhs, your tax rebate will reduce to nil. So you can see that once the person is starting earning above 7 lakhs, say for example in screen, before amendment, when person was earning 9 lakhs of income, there was a tax liability of 40,000. And when person was earning income of 10 lakhs, there was a tax rate of 52,500. And when the person was earning 15 lakhs, the tax rate was 1,40,000. All this tax liability is for the up to the financial year 23-24. Now let's take to the next table, which is in the below. What will happen when person earning more than 7 lakhs in the financial year 24-25 and opt for the new tax regime? So as you can see that when person is earning from 9 lakh, tax liability will reduce to 32,500. So there is a direct benefit of 7,500 person earning 9 lakhs and opting for the new tax regime. Similarly, if you see person earning 10 lakhs rupees, earlier there was a tax liability of 52,500, which will now reduce to 42,500. So again, there is a benefit of 10,000 for that tax liability. Let's go to the last slab, that is a 15 lakhs rupees. When before budget, the tax liability was 1,40,000. Now it is reduced to 1,25,000, which straight away gives you a benefit of 15,000. So by changing the slab rate, Finance Minister has tried to give some benefit to the person who are opting for the new tax regime. Now let's go to the second point, that is the change in the capital gain tax rates. So first, let me tell you about the change in the long-term capital gain. When person is earning long-term capital gain from the STT paid equity shares or a mutual fund, which is held for more than 12 months, it was earlier taxed at the rate of 10%, which will be now taxed 12.5%. However, there was an exemption up to 1 lakh rupees. So whenever person was earning income from long-term capital gain of the STT paid equity shares or mutual fund, there was no tax up to 1 lakh rupees. Now that exemption is increased to 1,25,000 rupees. So by increasing the rate, government has tried to compensate by also increasing the exemption limit. Now let me give you example for that also to give you better understanding. So as you can see from the screen that when the person was earning 1,20,000 rupees under and it is taxable under 112A, before amendment there was a tax liability of 2,000 rupees, as on up to 1 lakh rupees there is no tax. So on the 20,000 there was a tax of 10%, which was coming to 2,000. But now after amendment, as the exemption limit is increased from 1 lakh to 1,25,000, there will not be any tax, so there is a tax saving of 2,000 rupees. Similarly, for person earning income up to above 6 lakh rupees of long-term capital gain, there was a tax liability of 50,000, which is now increased to 59,375. So it will increase some liability, and that will be increase of say 9375 rupees. Similarly, person earning 11 lakhs of capital gain from the LTCG, that is the equity shares. There was a tax liability of 1 lakh rupees before amendment, but with the change in the tax rate from 10% to 12.5%, that liability will increase to 1,21,875, which will increase tax outflow of 21,875. Another change which was done for the long-term capital gain on the other assets, like say a residential house property, wherein there was a tax rate of 20% on the long-term capital gain when you hold the house property for more than 24 months. Now that tax rate is reduced from 20% to 12.5%. However, the benefit of indexation, which was available earlier, is now removed. Now, indexation benefit is removed, but that will have impact on your tax liability in different way depending on the appreciation in the value of the house property. And income taxes provided one example which you can see on the screen, that say for example, if you have acquired properties 10 years ago and you are selling that property in the financial year 24-25. So earlier, based on the indexation formula, there is a calculation is done in the given picture. You can see that. So in the table, as you can see, income tax provided 3 examples wherein the sale consideration is assumed from 200, 300 to 200 to 400. So if you acquire assets in, say for example, in 100 rupees in 2014-15, similarly, if you are earning capital gain of say by selling that property of which you acquired at the rate of 100 rupees in 2014, and now if you are selling at 300, the capital gain will be 200, obviously 300 minus 100. Earlier, you were paying tax of 29.8, which will now reduce to 25 rupees. So there is a benefit of 4.8 rupees, and effectively that will give you benefit of 16.1%. Similarly, if you got up appreciation 4 times, property which you acquired in 100 now increased to 400. So in that case, earlier you were paying tax of 49.8 on the capital gain of 300, which is now tax at 337.5, which will give you benefit of 12.3, which is roughly 24.7% reduction in your tax liability. So as you can see that your tax benefit from this change of changing rate and removal of indexation benefit will give you the tax impact depending on the appreciation. Now let's take to the next point, that is the short-term capital gain. On the short-term capital gain on the STT paid equity shares or equity-based mutual fund which you held for less than 12 months will now be taxed at the rate of 20%, which was taxed at the rate of 15% earlier. Next point will be on the standard deduction on the pension income. When person retires and receive the pension income, it is taxable in the head's income from salary. For them, standard deduction is increased from 50,000 to 75,000. Similarly, if after the death, if family member received the pension, then deduction was available up to the 15,000 rupees under the income from other sources, which now increased to 25,000. There is also change in provision for the unlisted company issuing a fresh equity shares, wherein there was a requirement to issue these equity shares on the fair market value. And if company is issuing the shares above fair market value, the difference amount was taxable in the hands of the unlisted company. So now that provision is removed and that will not be applicable in the future. Next proposal for the TCS interest liability, that when you are collecting TCS but not depositing to the government on time, there was a interest rate of 1% on the delay which is now increased to 1.5% to make it par with the TDS rate. Also, there is a long concern for the pending litigations with the different courts, and there is a cost of litigation for both the side, department as well as the taxpayer. So, like Vivad Se Vishwas scheme introduced in the 2020, again 2024 they are coming out with the Vivad Se Vishwas scheme, wherein they will try to reduce the litigation and cost of litigation. Also, there is one more change on the buyback of shares, which was earlier it was taxable in the hands of shareholder, then again it was made exemption in the hands of shareholder. However, now from the this Finance Act, it is proposed to tax in the hands of the shareholder, and it will be considered as a deemed dividend in the hands of the shareholder. One more point on the person earning income from rent income. Earlier, there was a confusion whether that rent income from the house property will be business profession or it will be a house property, depending on the number of property which they are holding and earning rent income. But now that point is clarified, and that rent income from the residential house property will not be charged under profit and gain from the business profession, and will be taxed under the head income from house property only. There are certain changes related to partnership firm, wherein whenever the partnership firm is making payment to the partner, they will be obliged to deduct TDS at the rate of 10%. Also, to track the high net worth person on the expenditure part, there will be a TCS on the sale of the luxurious good. Next will be regarding the property transfer. When there was a transfer of house property, there is a TDS liability of 1% on the consideration when the consideration exceeds the 50 lakhs. However, there was a confusion that if there are two buyers or two sellers, that 50 lakhs limit will be applicable on the each part or on the aggregate. So now, by this budget proposal in the 24 part 2, they have clarified that whenever there are more than one buyer or seller, aggregate value will be considered for applicability of the TDS provisions. Also, business expenditure incurred by the businessman or a company on settling any proceeding wherein there was a contravention of any law provisions. So that will be considered as a penalty. So basically they have said that whatever amount you are making the payment to settle that violation of law will not be allowed as a deduction for the business expenditure. There is an equalization levy on the e-commerce operator, that there is a change in the on that provision also. Further, there was a penalty for failure to disclose foreign income assets on the taxpayer if they are not reporting in the income tax return. For that also, there is a change in the limit, and where the aggregate value of such assets does not exceed 20 lakhs, there will be not penalty on the failure to disclose the foreign income or assets in the ITR. Lastly, on the corrections statement file, all the deductors of TDS and the collectors of TCS are required to file TDS and TCS return from time to time as per the given timelines, and they can file correction statement whenever there is some error in the TDS or TCS statement. There was no time limit in the earlier provision. Now, by this proposal in the budget, they have fixed the time limit that there will not be any correction statement which can be filed by the deductor or collector after expiry of 6 years from the end of the financial year in which TDS return is delivered. So I hope above points on the budget proposal key highlights will give you the brief idea about the proposal on the Finance Act number 2 Bill 24 presented by the Finance Minister on July 23. Thank you.